Good morning and welcome to BloombergQuint, India's first digital live streaming business news service. I'm Neeraj Shah and you're watching Indian Open. Let's go straight to the headlines. Maharashtra is put under president's rule as the Shiv Sena, NCP and Congress failed to make up their mind on forming a post-poll alliance and stake claim. India's industrial output contracts 4.3% in September, the steepest in 8 years. Tata Group is said to have reached out to China's GD Motors and BMW for a potential partnership for Jaguar Land Rover. That is a Bloomberg exclusive. Vodafone CEO says the India arm may be headed for liquidation unless the government does not provide relief on spectrum fee dues. Some grim words out there from Vodafone, grim words on the economy as well. It's not looking all that great as far as the economic arguments go. And mind you, we've been talking about this on the website now for at least 2 or 3 weeks that the forward-looking indicators don't inspire any confidence. But we'll get to that in a bit. First, what the world markets are doing. The world markets and the Indian markets on Monday didn't do all that poorly. Late trade, the Bank Nifty shot up. And after that, the US markets the last couple of days have stayed steady. They haven't faltered too much, which is an interesting sign. Now, if you just look at what the technical indicators or some technical indicators as far as the US markets go are saying, they suggest that maybe there could be some upside. This is a chart on the Bloomberg terminal which shows about how the record highs are continuing, and both in tandem, the rising 200-day moving average and the RSI, both moving up in tandem, probably indicate that the gains are set to continue. Or at the very least, the losses are not going to come in a hurry. Now that should be good news for world markets by and large. You need the mother market to stay steady and not really have strong down moves for the other markets to do well. Is this percolating down to the Asian screen? Maybe not so. I mean, the US had a flattish day, not falling, but a flattish day. But Asia is having a tick of red, and Hang Seng naturally would do that, but that is leading to some losses across the other bourses as well. And remember, in yesterday's session as well, Hong Kong wasn't particularly trading particularly well. So in today's session too, down about a couple of percentage points, Nikkei down about 1%, and maybe all of that might be having some impact on the sentiment on the SGX Nifty, which is likely to start off, or which is indicating a start of about 11,915 on the Nifty. Now, if you just look at, because we are very close to the Nifty weekly expiry, I just want to take a look at what traders are betting on, because tomorrow we'll have the Nifty weekly options expiry, and on the basis of the November 14th open interest distribution, you clearly have strikes of 12,000 being that strong resistance and about 11,900 being that strong support. So the trading fraternity is betting on this very narrow band for the next 2 days, and unlikely unless we see any major reactions that this will get broken off. So that's the limited point that I want to make on the index. It's futile to guess what the index would do when the bands are so narrow in trade, and therefore it's maybe more pertinent to look at what specific stocks could do. Now keep in mind, it's not from a Nifty perspective, but from a broader market perspective, a reasonably heavy earnings session today. SpiceJet, Nalco, Lemon Tree, you have IRCTC and Thermax and Pidilite as well coming out with numbers. The big one could be IRCTC simply because of the kind of gains that it has given to investors, so do watch out. Bata, a very important consumer name to come out with results, and you'll have Adani Power, a stock which is consistently hitting new highs despite being in the beleaguered space. They're coming out with numbers too, so a clutch of very important results that you should watch out for in the session today. But there are a lot of stocks that will react, and I mean, I have chosen the 4 or 5 or 6, the most important ones according to me, which will react. There are a clutch of Nifty names like Britannia, etc., which I have not even considered, which might all show a bit of a reaction. But to my mind, the ones that will show a reaction today, firstly, Lupin. They're going to sell the Japanese subsidiary for 3,700 crore rupees. This is a transaction that Lupin has entered into. Kiowa Pharma, which is 10% of revenues. Lupin will have a net cash inflow of about $300 million, which according to the management will aid in debt reduction. So this should help Lupin, the stock price sentiment today. I would really be surprised if it doesn't react positively. Tata Motors, and interesting to see which way this one reacts. They've approached BMW and a Chinese motor company for partnerships. This is as per a Bloomberg piece of news. A stock has been steady around this 170 odd mark. Remember, it had 2 big days of an uptick after the results. Then it's been steady between 170 and 180, currently at about 172. Let's see if there's more in store in the session today. Coal India normally doesn't react, but the numbers are above estimates due to better FSA realizations. Is the best ever FSA realization owing to higher supply to non-power consumers and great control. Let's see if this slightly dull stock is active in the session today. Then some strong numbers by 2 or 3 names: Phoenix Mills, Metropolis, and Indian Hotels. Phoenix Mills had strong traction in the mall portfolio. For Metropolis, it was strong results when profits were aided by lower tax rate. And for Indian Hotels, the results were above estimates. Domestic performance and the one-off in Sri Lanka may have impacted in the international biz, but the domestic business did very well for Indian Hotels. So let's see if these 3 stocks react in the session today. Avanti Feeds, the premises were searched by the income tax authorities between November 7th and 11th. It was 8% down in Monday, already sensing this. Let's see if there's more in the session today. Edelweiss Financial Services could be active. It has been active as a stock for the last few days. It's been on an upper circuit for 5 continuous trading sessions. They're going, or 4 continuous trading sessions. They're going to get about $75 million funding from Sanaka Capital and co-investors. So this should be an interesting stock to monitor. And lastly, do watch out for Yes Bank. Mint is reporting, Live Mint is reporting that the Munjals and Hemendra Kothari are in talks to buy 10% each in Yes Bank. So let's wait and watch if this is the set of investors that Ravi Gill was talking about, or this is in addition to something else. Well, very sketchy, because we hear some 10 names coming out over the last 10 days for a stake in Yes Bank. This is just reporting what has come out as per Live Mint. Lastly, just before we get to first word, the fact that the world markets are all doing well, but it's only a specific set of stocks which are doing well, is never more pronounced than what the biggies are doing across the world. And there is a clear trend wherein the US-based companies are doing far better than their Chinese counterparts. Facebook is an exception, but this is the race to the trillion, and you will see, I mean, of course, Microsoft is above that, but you can see, is, as far as what this chart is trying to show, is that companies like Microsoft, Amazon, and Alphabet are well on their way to $1 trillion or above that. However, Tencent and Alibaba are lagging significantly, despite Alibaba's sales much higher, or rather that those high frequency indicators much better than Amazon Prime Day sales as well. But somehow the investor money is flowing towards the US companies and not necessarily towards the others. Facebook is an exception. It's not quite there, but the others are certainly moving higher in trade. So it's an interesting one to see what some of the world biggies do over the course of the next few days, weeks, or months. However, let's tell you what's lined up on First Word today. Collection of the top stories that we believe we should bring to you. Industrial production contracted further in September. Pallavita Nahata will tell us about the pain points. According to industrial, adding to the industrial weakness is production cuts by automakers, which is helping some of them manage inventory. Sajit Mangat will bring us that data. Macro concerns have turned lenders even more wary. Vishwanath Iyer will tell us how that will hurt lower rated corporates. And then in earnings, Coal India beat analyst expectations. Nikki Mirchandani will explain what helped boost those numbers. And the political chess between BJP, Shiv Sena, NCP and the Congress has left Maharashtra under the president's rule. Kaushik Maidya will lay out the possible road ahead. India's industrial output contracted the most in nearly 8 years, with weakness seen across most key segments. Pallavi Nahata gets us all the numbers.
The index of industrial production contracted 4.3% in September on an annual basis. This was the steepest contraction in nearly 8 years. The contraction was even steeper than the 2.5% estimated by a Bloomberg poll of 24 economists. Cumulative growth for the first half of the financial year was 1.3% compared to 5.2% in the same duration last year. The weakness in output was widespread, with all 3 industrial segments contracting. Manufacturing output contracted 3.9% in September compared to a contraction of 1.2% in August. 17 out of the 23 manufacturing industries saw a contraction in output in September. Within the segment, motor vehicles, trailers and semi-trailers fell by nearly 25%. Mining output fell 8.5% after having remained flat in August. Electricity generation fell 2.6% compared to a contraction of about 1% in the previous month. This was the steepest contraction in the current series. Classification of industrial output as per end use indicated a continuing deep slump in investment activity. Output in capital goods fell for the 9th straight month, contracting 20.7% in September. Primary goods contracted 5.1%, while infrastructure contracted 6.4%. Intermediate goods continued to grow at 7% in September. Production of consumer durables and non-durables contracted even though this was a month leading into the festive season. Consumer durables contracted 9.9% compared with a contraction of 9.1%, while consumer non-durables output contracted 0.4% compared with a growth of 4.1% in the previous month. Weak industrial output adds to a long list of falling growth in economic indicators. Data adds to fears that growth in the Indian economy slowed further in Q2 of FY20 after having hit a 6-year low of 5% in Q1.
We speak to Ikra's Aditi Nair at 8:30 to understand how she's reading the IIP numbers and the implications for the economic growth. So stay tuned for that as well. Vehicle inventory in the country has come off after the festive season, but not in all segments. Two-wheeler stockyards remain filled up, while car, bus and truck makers manage inventory better. Sajid Bangat is standing by with the data he has compiled. Morning, Sajid.
Morning, Neeraj. We saw a decent month with respect to retail sales in the month of October, primarily because of festive season. And as a lead up to that festive season, we saw a lot of build up in inventory as well in August, September, going into October. At the end of October, we saw that dealers were sitting still in high inventory levels which were comparable to what we saw in February of 2019. If you just to put in perspective, from February 2019, we saw inventories production cuts started coming into the system, so that there could be destocking there. So there is a risk which is there that production cuts are continuing to go through for next couple of months till destocking happens. Remember, we are getting into a new year, and many of the cars are 2019 produced cars, so there would be a lot of pressure on the dealers to destock completely before the new year comes in. And in the next year, we'll have other issues like BS6 coming into the front, and that will be another challenge which will comes in for the auto sector. So the total units of inventory, which gives us a trend, has come down from 5.1 lakh units to nearly 4.1 lakh units. So it's marginally fallen in the month of October versus September. But and that's reflected in the inventory ratios as well, wholesale to registration ratio. Now this ratio basically gives us an indication of whether the factory sales have been more or whether the retail sales have been more. So it has fallen from 1.14 to 1.1 for three-wheelers, because this was a segment which was seeing quite good growth coming in last couple of months. And in two-wheelers, it has fallen drastically from 1.43 to 1.33. So there is still a lot of sales which is happening from the factories and being pushed to the retail level, but the sales are not getting converted into registrations. That's what this number says. Passenger cars, again, we have seen in the month of September, because there was a push to sell some more cars, the inventory ratio, the ratio went up above 1. Now it has fallen to 0.99. So there has been some kind of destocking that has happened, or sales happened. But we've also seen Maruti announcing its production cuts for the 9th consecutive month happening in November. So this would again go on for a couple of months, it seems. Commercial vehicles have seen slight build-up of inventory going into October from 0.9 to 0.99. So there is some push there, but there is no demand which is coming in, and that's the reason the inventory ratio is going up. And as a whole, if you look at the market as a whole, auto industry, the ratio has fallen from 1.34 to 1.23. So overall, there is a trend of reducing inventory, but there's still enough stock at the dealer end and there's no demand which is there. That's the reason the inventory continues to be at a higher level at the retail level.
Yeah, well, we thought October was a good month, and maybe it was for select segments. Let's see if November throws up.
The November is not going to be a good month because it has a base effect which is coming in. So.
Yeah, but just on an absolute basis, if the November month turns out to be good, then maybe it'll help clear some of this inventory as well. But
no, last November was a peak for auto industry.
Not base effect as well. Just if the absolute number is good, then maybe some of the inventory levels get cleaned up. People would be hoping for that. Let's see. The first 12 days done. So 18 to go. Thanks so much for putting that into perspective, though. That's The auto data. Now, there is slowdown out there too, and the slowing macroeconomic growth increases risks aversion amongst lenders, naturally so, which in turn has left companies with lower ratings in a slightly tough spot, or maybe a big tough spot. Vishwanath Nair is here to tell us more about this. Vishy, good morning. What do you have for us?
Morning, Neeraj. So, not very good news. So, what we understand from bankers now, there is no industry-level data as such to prove that companies which are rated in the below investment grade, which is basically BB and below, that they have been receiving less funding. But commentary of bankers that have spoken to BloombergQuint, as well as some of the data that is available from banks over the last 2 quarters of this financial year, both of them point towards a clear shift to higher rated corporates only. Now, this is not in favor of, this is clearly moving toward that one segment of accounts that are rated BBB and above, and that is evident from banks like SBI, ICICI, Axis, Yes Bank, Punjab National Bank, you name the bank, and it's pretty much you will see the data moving toward the more high rated corporates. What banks are doing, at least what an SBI banker told us, is that with respect to accounts which are rated BB and below, they are continuing to fund them if there were pre-approved limits. So if they had sanctioned limits earlier, then they are giving more funding. But other than that, if there's a fresh loan proposal, then they're really not considering it. 2 or 3 things play into this, because there's this huge stock of bad loans which hasn't gone out, which has been there for a while now, which is obviously not allowing bankers to consider those loans at all. There's a high risk weightage to lower rated corporates, because the RBI assigns certain risk weightages, certain types of loans, and because of the higher risk weightage, there is a higher capital allocation that goes from the bank, and that makes it unviable for the banker to go and fund these companies. Plus, what bankers are also saying is that these companies have some internal issues. The reason for the downgrade is not because the bank didn't lend money. It's because there was trouble in the balance sheet, there was issues with the way the management worked, or the business environment didn't go in the favor of the company, because of which there was that high leverage and therefore associated stress. Analysts from Jefferies have pointed out that companies with high debt to EBITDA ratio, they have been in the lower rated corporates. That number has gone up, which means that leverage in general is going up. Could be because there's more debt, could be because there's low EBITDA. So either way, that portion of the corporate universe is seeing high leverage, and therefore that makes it more and more difficult for banks to go out and actually lend. Plus, there's a massive merger that is happening in the public sector banking space. Now, public sector banks were largely they are in charge of ensuring that the economy moves forward, right? I mean that's how they all function. But because 10 banks are stuck in a merger, they are also not taking any kind of riskier decisions. They are sticking to the basics, they're sticking to more safe corporates, so to say. The outcome of all of that is these companies receive less funding, their problems become bigger, and eventually they start defaulting. All of them go into the NPA category, and that becomes a big issue. Yes Bank in their investor conference had also said, investor con call had also said that about 25% of their BB and below book, that's about 31,000 crore, out of that about 25% could slip into NPA. That is their expectations now. If that will be met, if that will be exceeded, or they'll undershoot, we don't know that as of now. But this problem with the BB and below segment still persists.
Yeah, it could actually become even worse if the situation doesn't improve. But the chart, Vishy, just tells you a picture, isn't it? From the last, March 2018 or September 2018.
September 18, yeah.
To now. And the kind of drop that is coming.
Yeah, apart from, let's say, Yes Bank, where there were huge amount of downgrades in the last 2 quarters, if you see any other bank, every bank is showing a clear contraction in that BB and below rated book. And that is not because of anything else, it's because that contraction has gone into NPA. Whatever loans are not there are currently in the NPA pool, and that is obviously something that is worrying.
Well, ICICI Bank, that's a stark chart as well out there. Maybe some PSUs, 37 to 6,000 tells you a story, doesn't it? Vishy, thanks so much for putting that into perspective. Very interesting story. And of course, most of these things, as I say, you can log onto our website and try and read more about this. As also the result analysis on the next stock, which is arguably the one stock that we want to talk about on First Word today, and as far as the earnings go, which is Coal India. The earnings have beaten estimates thanks to lower expenses and better realizations from its fuel supply agreements. Nikki Mirchandan is standing by with the fine print. Nikki, we don't usually talk about Coal India as much, but the results were pretty interesting.
I think it's a stock which is we should speak about, because in the last 1 month itself the stock has rallied 11%. You can expect some amount of positive traction on account of good results, because they've clearly surpassed the estimates. Top line, we've seen a decline of around 6.8%, but that's higher than what the street was estimating. EBITDA, a solid performance there, 16.4% down, but then the numbers at 3,611 crore were way better than the estimate of around 3,100 crore. Margins, they have contracted to 17% as compared to 19.5%. If you look at the profitability, we have seen a growth there, because the tax expenses, they have declined by more than 63%, which in turn has aided the operational performance of the company. Where do we see this decline coming from? Essentially, if you look at the volume picture, it tells out. If you talk about the volume picture out there, that's been hit by the severe monsoons this time around that we've seen. Also, strike in subsidiaries has impacted the volume growth. FSA volumes down by 11% year-on-year basis. E-auction, that has taken a hit by as much as 12%. Totally, we've seen overall volumes being lower by as much as 11%. But let's actually understand where this surprise is coming from. It is essentially the cost control that the company has shown. We've seen the contractual expenses being down. We've seen the fixed employee expenses being stable. So that's one bit of it, and the other bit of it is realization. Now, if we talk about the realization, FSA realization, that's the best ever that we've had. If you talk about the growth out there, it's a 10% uptick year-on-year basis as compared to an estimate of nearly a 3 to 4% growth out there. That's clearly where the surprise is coming in from. E-auction, where if you talk about the realization, that has seen a dip of around 22%. It's missed the estimates. That's account of e-auction premium, which is now at some multi-quarter low due to lower international prices. Overall, if you look at the pictures as a whole, realization looks pretty 3.2% uptick out there, clearly on account of FSA realization, which is on account of the higher grade control and the supply to non-power consumers as a whole. And Neeraj, most of the brokerages have kind of given a thumbs up to that. You have JP Morgan, which has actually increased the target price and the EPS. And it's gone ahead and said that they expect the H2 to be better than that of H1. Goldman Sachs, which is retained the neutral rating, but then again increased the EPS on the counter, says that they expect the volume in the near term, however, to expect to be impacted by the adverse weather. Edelweiss on Coal India, where they said the same thing. They've again gone ahead, maintained that buy rating, but then up the target price, increased the EPS, and they've said that FSC realization is expected to sustain at that current level. If that's the case, then we're looking at solid set of performance coming in for H2 for Coal India.
Well, let's see if the markets have already discounted that, or could there be more upsides. Nikki, thanks so much for putting that into perspective. That's Coal India. Amongst the results that stood out at the large cap end of the segment, a clutch of mid caps, as I already said, have done very well, and we'll talk about some of those, the likes of Metropolis, which has done exceptionally well, or the Indian hotel stocks, and we'll talk about all of them as well very soon. The last piece on First Word is on the state elections. Maharashtra is now under president's rule. The union cabinet made the recommendation to the president just hours before Modi left for Brazil. The Shiv Sena and the NCP are not losing hope just yet, with the Sena actually challenging the governor's decision to not extend the deadline for the party to prove its majority in the assembly. Kaushik Vaidya joins us now for more. Kaushik, who would have thought that the Sena would be so desperate for the Congress support?
Yeah, so here's what's happened. 20 days down, 19, 20 days down, you're closer to government formation than you were a week or two ago. But now this is happening at a time when time has run out. The state is now under president's rule, as you said. That oddly gives the parties involved, which is the Shiv Sena, and if you heard the Ahmed Patel, Praful Patel, Sharad Pawar press conference yesterday, they were saying what they are clear about is they won't do this in a hurry. The fact that they first need to agree on what terms they are part of a government, and then on what terms does the Shiv Sena get brought on board is something that will be taken step by step. And you finally, after that, you heard Uddhav Thackeray speak in the same language as well. The previous day you heard some sort of dissonance in the pace at which Uddhav Thackeray wanted it to happen and the pace at which the Congress and the NCP were doing it, which is why you reached a point of confusion of 7:30 on Monday evening it was, on what was going to happen. And the third window that the NCP was given. Now, the case you said that it will be heard in the Supreme Court today is where the Shiv Sena has gone to the apex court and asked under what logic was it extended only a 24-hour period when the BJP was given 48 hours and the 24 hours that the Shiv Sena was given was the back end of the 24 hours that the BJP was given. It wanted as much time as the BJP was given. All that, in a weird way, is now past, the water's flown under. Now, under President's rule, it's not about how many days you're given. They can take as much time as they have to bring this together and go to the governor again. When they go to the governor again and say we now have a number of 154, I think that's being discussed, then the governor needs to call them in, form that government, swear them in, take that to the assembly and rescind President's rule. Remember 5 years ago when these parties fought separately, it did take the Shiv Sena and the BJP 20 days to come together and form the government. So President's rule is not as unnatural and as rare in this state as where you'd think that with a straight mandate you'd have government formation immediately. That was under the arrangement where the BJP and the Shiv Sena were together. Oddly, on that front, Uddhav Thackeray does not explicitly say that he's not part of the NDA anymore. He was asked that many times. In this very city, the municipal corporation is run by the Shiv Sena and BJP together. We've heard nothing on that front. On what terms are the Shiv Sena and BJP continuing to run the Mumbai Municipal Corporation? There are questions that remain to be answered that we'll hopefully get answers on in the next couple of days.
It's a rich body, a rich municipal body, and the Shiv Sena would well want to hang on to that as well. But Kaushik, very interesting. And I dare say, while we have had some very interesting times on the markets, you had arguably the most interesting last 10 days just tracking this space. Thanks so much for bringing it to us. Almost every single time something big has developed on this front. Though we might see no development, there's lots of pieces that have moved around. And that's all that we have on First Word today, though. But lots more lined up on Indian Open. We talk about markets and macros with Ajay Srivastava about Dimensions Corporate Finance, earnings with Michael Holland of Embassy of Sparks, and Amira Shah of Metropolis Healthcare. But after this break, a full tilt towards the day's trade.